Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and today we are supposed to have tornado weather in this part of the country, and our baseball coach is going to make us do baseball practice. Not cool. Well, it's an indoor cage baseball practice, but still, I have to be one of the guys in there throwing. And I made the mistake of I started running contests with the kids so that they can win like a pack of gum or some sunflower seeds if they win a contest. And I've learned that once you set a precedent, they expect you to bring prizes for every practice. So I have to go to the store and get a couple of prizes. That's what that means. Okay, now I told you yesterday I've been going through Bank XRP's channel. Bank XRP has an excellent channel. Let me show you. It's Bank XRP. You need to subscribe to it. He is one of the old school guys in XRP and Ripple. He's got on his channel, he has almost every video of a speech or an interview with just about anybody at Ripple. Anything having to do with Ripple or XRP, it's like a library. You need to go check it out. Well, this is the most viewed video on his channel, Ripple XRP Interesting Highlights video. I spent time going through the whole thing, and I brought a couple of clips out. This is one of them that I wanted to show you. How can you not love Michael Arrington? He called it, tells it like it is. Credit to Bank XRP. Listen to this.
I think what it means, though, is obviously the U.S. regulators have got to step up. I think they're doing a pretty good job, but we haven't. Wait. Got to give credit. It's hard. It's hard work.
Let's take the statement of we think the U.S. regulators are doing a pretty good job. Let's wrap that up and let's put that over here for one moment, right? Let's continue with China, but I want to just come back to that.
This is being recorded, so they are going to see all that. So,
because they're bastards. I mean, I think we have a difference of opinion on the U.S. regulatory ability and willingness to do a good job. But back to China, yeah.
Well, at the same time, though, the U.S. leads, I have to say, they have led in the whole internet revolution.
Internet revolution, which was awesome because they didn't mess it up.
We could have gone either way, though. There was a critical moment in 97.
Yeah. But you would agree that the SEC is the single greatest evil in stopping the U.S. from being competitive in crypto. You would say that, right?
I'm going to take back your socks.
Let's put this back over there. I know you can't say things that I can say but I know how you really feel about that. But
I do that.
The Trump
is uncomfortable.
I'm sorry. I'm not going to go too deep into this.
I did not say that, so.
Actually, I'm going to put the Trump one back over there. We're not going to talk about that.
But you have to admit, though, this is the best fintech environment we've ever had.
So you're a big Trump supporter.
Well, what I support is not too much regulation, right? Otherwise, sometimes you try to go after the big banks. The big banks are fine. They got a ton of money, a ton of lawyers, and you end up crushing all the entrepreneurs.
Yeah. Well, I think that's it. I appreciate your time. I think what we agreed on is that the SEC's evil.
Chris Larson's like, no, don't say that.
I think the other thing was that everybody is crazy in this industry, right? Except that's it. No.
I think it's time to go.
I remember that interview because Chris Larson was so uncomfortable. But Michael Arrington's one of those guys that likes to he's a gunslinger, tells it like it is. All right, here's another clip from that same Bank XRP video that you just have to see. This is Barry Silbert from the Digital Currency Group being interviewed.
Recently, you launched your digital large cap fund, and as you mentioned, you also have the Ripple Investment Trust. I know some of your portfolio companies, particularly the top tier exchanges like Coinbase, Gemini, and Circle, they're all declining to list Ripple because it seems like a security. So how did you choose Ripple and decide to also include it in your large cap fund?
Starts off with investor demand, and as evidenced by the activity in the trading of XRP and the market cap, there's clearly investor demand for it. And so for us, it was an easy decision to kind of just go through the list of tokens and do our own analysis around ones that kind of could be securities. And the conclusion obviously before we did this was that XRP was not a security. And its inclusion in the large cap funds, that we don't have discretion. That fund is it's a market cap weighted formulaic construct of a fund where it tries to essentially capture the top 70% market cap of the tokens, but there's exclusions around tokens that are not traded in U.S. dollar, markets. There's exclusions around lack of custody solutions. There's exclusions around ones that may be deep securities. So XRP being included in that large cap fund means that it's one of the largest, and we don't believe it's a security.
So you have to believe Digital Currency Group is a huge company, and they're located in New York. I can't even imagine the Digital Currency Group would not have had conversations with the SEC to make sure they weren't doing anything that wasn't proper. Wonder if Ripple wants those communications. By the way, Barry Silbert, Grayscale Investments is offering new trusts to invest specifically in 5 different cryptocurrencies. BAT, I have some of that. Link, I don't have any of that. Mana, I don't. Filecoin, I think that is. That's the one Greg Kidd was talking about. I did buy some of that. I don't know what LPT is. Okay, and then this was another clip from Bank XRP's thing. I forgot to give him the credit here, but he knows that we love him here on this channel. So Bank XRP, this was from his channel as well. Bitcoin Maxi trigger warning, not my words. The truth does not change according to our ability to stomach it. Here's the truth.
I feel like I almost have to give a trigger warning here. If there are any Bitcoin maximalists who wandered into the room, some of this material may be a bit triggering for them. Just a heads up. Systems that ride on it. It may be that moving millions of dollars in value has a near zero cost. Like moving gigabytes of information has a near zero cost, right? Like the cost of moving things has come down to zero. So it could be very useful in the values it moved and capture very little value itself. And proof of work doesn't work if that happens. So it's not a good choice to build on. And it forces a race to the bottom. As we saw in the attacks on Ethereum last week, a miner has a free option. A miner can try to gain all of Ethereum's decentralized ecosystem at zero cost. He can assemble the transactions in a block however he wants. And if a miner makes more money by gaming the DeFi ecosystem, by taking orders that have gotten out of balance, not allowing people to cancel orders, whatever he does, he's going to make more money than miners that don't do that. And so he's going to mine more and they're going to mine less. And he can force them out of business. Mining is a race to the bottom. You've got to make the most money for every hash you do, or you're squeezed out of business. You got to do your hashes at the lowest cost possible. There is no incentive really to improve the network other than the sort of diffuse incentive that if the whole ecosystem is good, the system is better. But that's like what we don't rely on, right? Like if the only thing we relied on was that, well, miners want the system to work well, so they have this sort of diffuse incentive to make the system better. That's not how mining works, right? We presume miners are selfish. And so it forces a race to the bottom. I don't want you to mine because you're pushing the difficulty up for me, even if you're making the network better than I am. You're sort of indifferent to the quality of the network because you're forced to. And it doesn't really operationally decentralize very well. All of the people who mine look like all the other people who mine. They're people who have cheap power and good hardware, can operate cheaply. They tend to be similar looking. Miners choose how the system makes forward progress. The only reason they have to provide operational decentralization is because if the system sucks, people won't use it.
So that's David Schwartz telling you the truth. We love the truth here. Mac Attack XRP, and you're starting to see the truth leak out here a lot more than, at first we weren't supposed to talk about anything bad about Bitcoin, but what you're starting to see, and I believe there's a lot of companies and people out there that have been activated to start telling the truth about what Bitcoin is and what it is not. Bank of America looks like is one of them. But from Mac Attack XRP, Bank of America says there's no good reason to own Bitcoin apart from speculation. Bank of America has thrown cold water on Bitcoin in its new report. Not me talking, it's Bank of America talking. Ice cold from BAML on Bitcoin's dirty little secrets. Quite the contrast with Citi's report. Data suggests that this is from Bank of America. Data suggests that institutional announcement inflows into GBTC and minor reward cuts help drive Bitcoin prices. The main argument for Bitcoin is not diversification, stable returns, or inflation protection, but sheer price appreciation. Bitcoin CO2 emissions are the same as Greece's and rise in line with prices. Our ESG reading is low on E and mixed on S and G, whatever that means. No good reason to own BTC unless you see prices going up. Yikes. We calculate that a $1 billion inflow into Bitcoin is equal to 1.2 million cars driven over the course of a year, or 12.7 million barrels of oil. Bitcoin trading can be done well. There are notable examples of good practices. For example, the Swiss exchanges, where all cryptocurrency transactions comply with regulations such as customer protection and anti-money laundering. Okay, and then there was this, and this is what I said. The Bitcoin Bad for Climate campaign has been activated. Now look at this. This is from the CFTC. And remember, what have we said XRP was all about all along? FX and derivatives. FX and derivatives. And now the CFTC puts this out. Acting Chairman CFTC Benham has established the CFTC Climate Risk Unit to focus on the role of derivatives markets in addressing climate-related risk and the transition to low-carbon economy. How can you transition to a low-carbon economy if Bitcoin is going to be this center of the economy, and Bank of America just told you how much carbon it puts out? The answer is you're not going to transition to an economy where Bitcoin is at the center of the economy. That's what I've been trying to tell everybody for months now, if not years. Okay, Dave at Dave6971 sent me this. Coinbase Pro adds support for Cardano's ADA. And you're seeing it reflected in the prices. Cardano has been surging. Cardano being one of the projects that I think will do well over the long term because it is not proof of work. Well, that's one of the reasons. Okay, Kava Labs put this out. They're one of my sponsors. I've got the link to this in the top of my description. I love the Kava platform because this is DeFi. This is what's going to change the world. But they put this out today. Kava 5 incentivized testnet launch success. Join now. What they're doing is they're running a contest or where you can win, I think, $10,000. Kava 5 incentivized testnet rules. Finishing touches are being put on Kava 5 and hard money market borrow feature with dynamic interest rates. You know how we've talked on this channel a lot about how you may not ever sell your XRP? Well, what you may do is use a platform like Kava. And you may not know this, but Kava runs on the back end of Binance.com. So that if you go and you're being paid interest or doing any of the things that the Kava platform does, they're going to have it where you can borrow or be paid interest, whatever you want to do, borrow against your XRP. I've told the story about in my town, there's many people that were early owners in stocks like Coca-Cola and things like this. Coca-Cola was invented in Georgia, United States, where I'm from. So anyway, there are many of the people that have those early, the early that bought, whose families bought into Coca-Cola 100 years ago. They have a cost basis such that they can't sell their Coca-Cola stock. Well, that's where places like Kava enter. These people that own that Coca-Cola stock, they borrow against that Coca-Cola stock that they will never sell because their cost basis. Same thing, in my opinion, is going to happen to XRP holders and the holders of a lot of digital assets. Well, that's where platforms like Kava come in. You're going to be able to borrow against your holdings. And you're going to be able to do it. You can do it on Binance, but they're going to be on other platforms. There's going to be companies coming out of the woodwork where Kava will be running on the back end. If I was any of these companies that's starting to sell digital assets on their platforms, I would be getting in touch with Kava for the purpose of that, to get them to run the back end so my customers could borrow and get paid interest on their holdings that are on my platform. And you'll see a lot. You're going to see this go more and more. So anyway, back to their $10,000 contest, Money Market Madness competition, March 17th to March 24th. Users will be ranked by the amount of hard tokens they have claimed throughout the competition period. And then they've got here are the facts, You can, if you go to, here it is, go to @Kava_labs, their Twitter feed. They got the link so you can read all about that contest right there. Now there's a link from the contest where you go, it's right here. Kava 5 testnet faucet link here will supply a limited amount of assets for users to obtain and use in the hard money market. So this is what that link takes you to. You'll drop your Kava address in there and request the tokens. And here's, just wanted to show you, if you don't have a Kava address, here's some of the platforms where you can get it. If you go down Binance, you can buy Kava or get an address. Hobie, and then Kraken. Let's see what else. I think it was on Bitrue, but I went and looked. Yeah, it was on Bitrue, but I went and looked, and they have their wallets locked right now for some reason. Maybe you can ask about that. Okay, and by the way, go and ask anybody who's not paying interest or letting you borrow on any of these platforms. Ask them why they aren't getting Kava to support them. All right, CoinDesk, new wealth management giant Morgan Stanley is launching access to 3 funds that enable Bitcoin ownership, according to a CNBC report. I've told you 1,000 times on this channel that not some of the traditional financial firms are going to get into digital assets, but all of them. Morgan Stanley is one of them that has been quieter than just about any, but here comes Morgan Stanley, and look who is involved. Mike Novogratz. Galaxy is thrilled to partner with Morgan Stanley, the first U.S. bank to offer wealth management clients access to Bitcoin funds. Okay? Now, just a little caveat about how I talk about Bitcoin. Sometimes I own some Bitcoin. Okay? I own some Bitcoin as a hedge. But I know that but in terms of digital assets, proof of work does not work. That's why Ethereum is upgrading to Ethereum 2.0. Bitcoin, if any of the proof of work is going to be allowed to exist, it'll be Bitcoin just because there's enough billionaires and marketing programs behind it. But I would not be telling you the truth if I did not tell you what's good and what's bad. The good about Bitcoin is that it was the first one. It's what's getting people through the door for now. But there's still that scary part about how they could come in and get rid of it and regulate it out of existence because of the bad things that you need to understand about it, like the climate killing part of it, okay? So that's why I go over that. I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe, hit the like button, and tell your friends and family that welcome Morgan Stanley to the digital asset party. Thank you for listening.